Hello, Rick Komarek, Certified Financial Planner, bringing you an article that I just uploaded to my blog site today, March the 3rd, 2020, titled Calming a Pandemic of Fear. As February began, most investors were keeping a cautious eye on the coronavirus that was spreading in China. While there were isolated outbreaks around the globe, they were just that, isolated. Some firms began to back away from prior financial forecasts, but a mistaken belief that the illness would be contained to China kept markets tame. That changed dramatically when headlines surfaced that the coronavirus had spread to northern Italy, South Korea, and Iran. The good news, new cases appear to have considerably slowed in China as of March the 1st, according to Worldometer, which combines data from global health organizations. The illness spreading in Italy and South Korea. Iran isn't far behind, but it's widely believed the economically isolated nation is dramatically underreporting the intensity of the virus. What's behind the market sell-off? Driven by computer cell programs that take their cues from headlines, the hit to stocks originate amid anxieties that the coronavirus will damage the US and global economy. When it was contained to China, there were fears that shuttered factories would disrupt the flow of parts that are made in China and are used by US companies. Economists call this supply shock. As the name implies, the supply shock reduces the supply of goods available to businesses and consumers. Today, there are growing worries that any disruptions to normal routines could also pressure the demand for goods and services, delaying a projected acceleration in corporate profits this year. Economists refer to this as demand shock. Earnings in 2019 are forecast to rise just under 1% from 2018. For 2020, profits are forecast to rise 7.7%. However, as analysts begin to ratchet down forecasts in response to the change in economic sentiment, these recent projections could be out of reach. So let's give some perspective, the coronavirus and past epidemics. The virus has created heightened uncertainty. This heightened uncertainty means that the number of economic outcomes has widened. In this case, they all seem to be to the downside, of course. But are investors overreacting? Is the public overreacting? The flu has infected 32 to 45 million people in the US this season per the CDC, which began on October 1. There have been 310,000 to 506,000 hospitalizations and tragically 18,000 to 46,000 deaths. Yet the vast majority of us in our daily routines go uninterrupted. In comparison, just 88 Americans have contracted the coronavirus as of March the 1st. Per the Wall Street Journal, the new virus is particularly challenging for public health officials because people who are infected and transmitting to others might have only mild flu-like symptoms or no symptoms at all, making them difficult to identify. Knowing the virus creates only mild flu-like symptoms in some people may alleviate some worries. Of course, the elderly and those with compromised health must be more cautious. On the other hand, compared to the seasonal flu, the coronavirus seems to be more contagious and deadlier, despite the fact that confirmed US cases number only a fraction of the annual flu. Health officials do not have complete understanding of the virus, but our knowledge is progressing. While we don't know if this will eventually turn into a significant health crisis, we've lived with epidemics before, including the measles, polio, SARS, MERS, H1N1, and the flu, which strikes every year and can be deadly, as we mentioned previously. During the H1N1 pandemic of 2009, coronavirus has yet to be deemed a pandemic by the World Health Organization. There were approximately 60.8 million cases, 274,304 hospitalizations, and 12,469 deaths in the US between April 12, 2009 and April 10, 2020. Despite the human toll, stocks were already in the early phase of a bull market. Today, we're being pelted by wall-to-wall media coverage of the coronavirus. In 2009, the media may have been more focused on a new president and the Great Recession, limiting to hysteria. Fear spreads fast, but keep perspective. While we can critique the media and stock market reactions, what we know is the market has sold off. Fear has spread far faster than the virus. As we enter March, the economy is on solid footing. The banking system is in much better shape than '08. On February 28th, Federal Chief Jerome Powell reaffirmed, quote, "The fundamentals of the US economy remain strong." But he added he is closely monitoring developments and their implications for the economic outlook. We will use our tools to act appropriate to support the economy. The last sentence is a Fed way of hinting that a rate cut or other action is being carefully considered. And by the way, as of the reading of this, it appears that they did in fact make a 50-point rate cut in the Fed funds rate. That said, we know the volatility in markets is inevitable, but has typically been short-lived. Stocks sometimes take the stairs up and the elevator down. This bout of volatility will end, but calling a bottom is virtually impossible. You and I know that no one can do that on a consistent, regular basis. Once again, I will emphasize that your financial plan incorporates your goals and is based on a number of factors, including risk preference and time horizon. It's a roadmap to your financial future. It incorporates the inevitable market declines and is designed to help you keep from making rash decisions when markets turn volatile, or for that matter, when stocks surge ahead and one may be tempted to take on more risk than is appropriate. I recognize that these are trying times, not simply from the vantage point of the investment community. No one likes uncertainty, especially as it relates to our health and the health of our loved ones. Uncertainty drains our most precious resource, and that's peace of mind and happiness. So what can you do? Well, turn off the news, go outside, turn to what brings you peace. And as I'm reading this, it's going to be 80 degrees here in Northern California, so enjoy the nice weather. I'm confident that this too shall pass and we will be better for it. If you have any thoughts, questions, concerns, feel free to reach out to me anytime. That's what I'm here for. My door is open.